we are doing today is to combine two events. We have a launch of our product we'll talk about a bit later, but we'll start off by just giving an overview of what's been happening in the investment landscape. We know it's been we're coming from a very challenging year, 2020, so we'll be sharing some of our insights. So we'll have a brief review after a very dramatic year. Then we will also follow that up with the official launch of our DigiTrust product, which is an online portal that will enable our clients to conveniently purchase units. What we are seeking to do and aim to do is to democratize investments, the investment offering in Kenya. We are looking at how we can be able to enhance financial inclusion in our markets. And financial inclusion has remained very stunted for very many years. And we at ICEA on asset management are aiming to make our mark in deepening the capital markets. So I wish to record the appreciation from the team and ICEA Group to the Capital Markets Authority, who have been very supportive to us during this journey. And so with this for us is a significant milestone and an achievement, and we look forward to providing with more details.
Into the new year, I wanted to provide an overview of the economic and investment landscape in 2021. So I wanted to start with a global overview, and what we've seen is that despite what happened in the pandemic, at the beginning of the second quarter, there were some very dire predictions in terms of GDP growth. I mean, we are still going to end up in a global recession this year, but it will be slightly less painful than what was originally anticipated. And what has happened is that the economies have recovered slightly faster than what was originally anticipated, especially in the US, in the Western world. What we've seen is that the fiscal stimulus measures that have been put in place have boosted spending. Those economies are very consumer-driven. So what's happened is that we've had a slightly better projection in terms of a lower expected GDP contraction for 2020. And heading into 2021, we expect growth to recover. And as you can see, all sectors were affected, all major sectors of the world, all major geographical regions, especially Europe. But the good takeaway here is that Sub-Saharan Africa, although Sub-Saharan Africa was not spared, we've seen that the Sub-Saharan economic activity in Sub-Saharan Africa has turned out to be the most resilient in terms of Sub-Saharan Africa will have the lowest GDP contraction resulting from the pandemic. Moving locally, I just wanted to provide some context about the impact of the pandemic. So you see here that the accommodation and restaurants and education sectors had the sharpest fall in economic activity due to the pandemic, with the accommodation and restaurant sector, which benefits from tourism, contracting by a whole 83% in the second quarter. And the education sector, with the schools closed for obvious reasons, contracting by 56% in the second quarter of 2020. There's a possibility that the weak performance of these two sectors will persist in the third quarter and fourth quarter of 2020. They say every cloud has a silver lining, and the major silver lining we saw here was in the agriculture sector, which actually grew by 6.4% in the second quarter of 2020. The other sector which benefited was the health sector for obvious reasons. You can see the health sector growing by 10% in the second quarter of 2020. That is like double the rate of growth. You can see in 2019 and 2018, the health sector recorded growth of around 5%, 5 to 6% in the second quarter. But in this particular second quarter of 2020, the growth in that sector doubled to 10%. So coming to 2021, which sectors are expected to lead the GDP recovery? Well, we anticipate that manufacturing, education, the hospitality, transport and trade sectors will lead the GDP recovery in 2021. Moving on to the fixed income side, we've seen some upward pressure on interest rates across the yield curve. This is because obviously there's been pressure on government revenues with the cutting of interest rates and the cutting of tax rates, both at a corporate and personal income tax level. So there has been some upward pressure, especially in the second half of the year. However, we note that the interest rates across the yield curve still ended the year lower than where they began the year. This means that real returns have been under pressure because inflation has been on an upward trend, and we may well see inflation continue to rise. It's hit an 8-month high as at the end of 2020. We may see continued upward pressure on inflation, which will put fixed income returns under pressure. And the other thing that will, however, there might be some respite from, we expect bank lending to pick up again in 2021. Private sector credit growth has been in single digits, but for the first time in 5 years, we expect private sector credit growth to hit double digits in 2021. The banks have been starved of credit opportunities for almost 5 years now because of the rate cap and then the pandemic. But we expect the banks will be more in favor of lending as the risk appetite slightly improves in 2021. Coming to the Nairobi Securities Exchange, we think that the NASI, the All-Share Index, could return double-digit returns in 2021. And we think that for two reasons. The first reason is, as you can see, from 2017 to 2019, the Nairobi Securities Exchange correlated very well with global markets. In 2017, all global markets were positive, as was the Nairobi Securities Exchange. In 2018, there was a downturn in equity markets globally, and the NASI participated in that as well. Then there was a recovery in 2019 in global markets, including the NASI. But we see in 2020, something very interesting happened. While most markets globally, especially developed and emerging markets, recorded positive returns, we see that the Nairobi All-Share Index, the NASI, was down 9% in 2020. And would have been much worse than that if it wasn't for Safaricom. Safaricom recorded a positive return of 8%. Secondly, we see that the Nairobi Securities Exchange and the All-Share Index tends to recover very well from bear market years. You can see the bear market in 2016 at the Nairobi Securities Exchange was followed by a rally in 2017. The bear market in 2018 was followed by a positive rally in 2019 by the All-Share Index. So we had another bear market in 2020 when we saw negative 9% return from the NASI, and in fact, most like the banking stocks were down almost over 20%, 20 to 30%. So in summary, the key points are that firstly, economies in the West have recovered from the pandemic slightly faster than expected. Sub-Saharan African economies slowed down the least as a result of the pandemic. Secondly, the health, agriculture, construction, and real estate sectors were the more resilient during the pandemic. While we expect the GDP recovery in 2021 to be led by the manufacturing, education, hospitality, trade, and transport sectors. Q3 GDP numbers are yet to come out. We may well still record negative GDP growth in the third quarter of 2020, albeit not as low as the second quarter. We've seen that trend in Uganda and Rwanda, whose third quarter GDP numbers have already come out, and they both had negative GDP contraction in the third quarter, but not as bad as it was in the second quarter, and that trend could persist in the Kenyan economy when the third quarter GDP numbers are finally released. In 2021, fixed income investors will need to be agile and focus on short-term securities so as to be in a position to exploit potential increases in interest rates on government securities. The fourth point is that private sector credit growth is expected to hit double digits for the first time in 5 years. Based on recent trends in recent years, we think the Nairobi Securities Exchange offers potential for double-digit returns in 2021. Banks are expected to post sharp earnings recovery based on reduced loan losses, and hence banks appear to be the sector with the greatest upside at the Nairobi Securities Exchange for 2021.
First and foremost, on behalf of my board and staff of the Capital Markets Authority, let me pass our congratulatory messages to ICEA Lion Asset Management Limited for the launch of this digital trust fund portal. As we have seen, this digital trust fund portal is a self-registration portal with e-commerce functionalities, having the capacity to activate an account within 5 minutes, with a WhatsApp chatbot and a USSD platform for after-sale service. The platform will definitely go a long way in democratizing investment, with more power to manage the CIS investment portfolio being granted to the investor. Let me also congratulate ICEA Lion Asset Management for being among the top 3 fund managers in the terms of CIS asset under management, managing assets of well above 10 billion as at September 30th, 2020. This is commendable, and we hope the introduction and launch of this DigiTrust will propel you to bring more Kenyans to the CIS industry and thereby improving our financial inclusion index. Allow me to state that in collaboration with the key market players, NSE and CDSE included, we have been encouraging stakeholders to participate in capital markets using available digital platforms that primarily promote self-service approaches to investment. As of now, we have various platforms, including NSE app, CDSE has one. We have 15 market intermediaries enabling online securities trading, and 7 market intermediaries enabling mobile phone-based trading. This shows that the industry has taken this seriously, with investor numbers that use these platforms significantly rising. And this we have noted during this pandemic period.
So it gives me great pleasure to join ICEA Lion today as you launch the DigiTrust digital portal. I'm very happy to see that this is coming just at the back of coming out of a very difficult COVID period, and I know we are still in it. And it's very important that we start developing front ends that will still make the customers access our products. So the future of Kenya's investment sector lies in the ability to leverage on technology in delivering services. The increased technology touch points, really supported by our growth in mobile penetration and increased internet access, will provide opportunity to enhance access to investments, especially for the younger generation. The experience we've had with COVID has just demonstrated that. We thought that we would experience a very major downturn, especially in domestic investment, but we were able to sustain that because most of the intermediaries, as the CEO of the capital markets highlighted, had already developed front ends that would allow people to trade through their brokers. And I think now you're creating a front end that allows investors to actually invest with you, and really this is the direction. I think Kenyans are investment savvy, are internet savvy, and hence your research is just a demonstration of what they're looking for. As of September 2020, mobile subscriptions stood at about 59.8 million, while the penetration crossed the 100% mark, marking a high of 125%. So the statistics I just quoted are an indication that where our current and prospective consumers are looking at. And I think it's very well and very well timely. As you're aware, the consumer demographic and behavior trend is rapidly changing. The average investment products consumers used to access before is changing. They're currently looking for consumers that have got wrappers of technology around them. And hence, for you to continuously enjoy the loyalty you currently have for your products, you've got to really innovate and look at how you can deliver them in a better way. I'm glad to note that ILAM is taking leadership in innovation. So why is it critical for the investment sector to adopt technology? And I think I'll just highlight some of the key reasons why I think it's important. One of the key challenges that we've continually faced in this sector is onboarding. As I was looking through your onboarding process, it really addresses a lot of the KYC concerns that we have. I even saw the fact that you're using FACTA and all these KYC checks are very, very important. Very simple, very easy to understand, and hence, that's been one of the key challenges to bring on board people. So I believe that there is room for us to enhance our savings rate. You can see we're even below the sub-Saharan rate of 19% at 7.97. That's extremely low. And I think access has been one of the key challenges. And I think you're aiming to address this by providing that avenue. I think more importantly is how you're able to really market this product, build visibility, build understanding. Kenyans are very good at adaptation. So if you're able to really go out there, build and really make it more robust and market it well, I think your subscription levels will enhance and increase. I think the other key issue that you'll be addressing here are the issue of costs. Cost has been a challenge. The fact that before you had to actually come to the office, meet an advisor, sign forms, etc., and now you make all this on the phone is going to be very, very cost effective, even for investors, and that will enhance them. As a result, I see you attracting a lot of young investors, less affluent individuals, and that's enabling them and support their efforts to save and invest. Now, the next phase of competition in finance and investment sector will be how to monetize and use data, especially customer data. So you need to find a way of making sure we are able to change and use data to really build a share of mind, especially in the youth, and really make it as exciting as possible. So I think with that I think the launch of the DigiTrust, I think it's a great name. Today I thought it was a new unit trust. In fact, when I walked in here, I asked, is this a new unit trust? I was told, no, this is just a portal that is now innovating and providing access for our current products. So you're actually moving forward. So this is good, and the name is very unique, and we really like it. It's exciting.
One of the major reasons why we came up with this product is customer feedback. And today, I'm so proud to see one of our clients who was very instrumental in the journey of coming up with this product, because they gave us feedback that is real, that is candid, that gave us the insights of where should we be heading, rather than being so focused on ourselves. So some clients said, investing is for the rich. I don't earn enough money to start investing. And what a sad story when people feel like they are outsiders while we want them to be inside where the dining is happening. So that gave us grief when we think that many people feel they are outsiders, they don't belong, and we want as many of our clients, prospects, Kenyans, non-Kenyans, to be part of this investment journey. Then others said, if I invest and I have an emergency, how quickly can I get my money? And you all know about the scams that have happened in Kenya. So many times Kenyans have gone, you've denied yourself luxury or even real things, and then when you want the money back, it becomes real grief for you to get the money back. And we are saying this product doesn't give you grief. It comes to sort out that issue where people feel they give you the money, they really have to hustle to get it back. And we are saying it is going to be as easy as your ABCs to get back your money when you want it, because you are saving for that very purpose, to deal maybe with an emergency or a project that you are looking forward to. Then others said, these guys for banks, they're always confusing us with numbers. Oh my God. Of course, banks deal with numbers, and it's fair for them to think that banks, and apparently the fund managers and banks are not separated. To a client, fund manager, bank, you're all the same. You ask us for money, and somehow you give us numbers and you confuse us in the middle of that, compounded interest and all that manner of thing. But here we are saying no confusion anymore. You can see it. It is transparent. It is really, really an accountable journey that you'll be taking with us. Then the process of setting up an account is manual and very, very tedious. And that I can testify, even for myself, even with my CFA, when I first wanted to open an account, an investment account, I thought, am I really buying a piece of land or investing 10,000 shillings? Because I was asked for such a rigorous, amount of documentation for me to get that account, but we are saying we are reducing that and bringing you a simple journey that will make you invest very easily at your comfort. Then the other thing, we all love our nation. We all love Kenya. We know we have a Vision 2030 that the government has been really, really pushing. And one of the things we looked at is, what are the savings rates as a percentage of GDP? And looking back, 20 years in, Kenya has actually recorded favorable savings rate, but apparently in the last 10 years, it's been a downward hill. And seeing savings rate coming down just tells you we are not doing well as a nation. And if you're a patriot, and we ought to be patriots to our nation, then we need to do something. We need to be part of the journey to realize the Vision 2030 desire to see the savings rate go towards the 30% mark. We are below the sub-Saharan African number, 19%. We are below the middle income countries. So what are we doing? We are Kenya. We are a giant economy. ICEA Lion want to be associated with success of the nation beyond. So thinking beyond ourselves and thinking in a bigger way. And if we all do it, then we will achieve this national vision of increasing the savings rate in our nation. Then something that my CEO also mentioned here, we had a quest to democratize investments. Nobody needs to be left behind. We need to be on this journey together. So we said, what really is a problem? A lot of times is the high numbers that are put, that if you have to be an investor, you must be a millionaire. No, 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 no. You don't need to be a millionaire to start investing today. With only 500 shillings, you can start your journey. And humble beginnings are really, really good because they give you a mark where you can reflect. If you're a Christian, you say that will be your altar. You know, your 500 shilling altar. Please seed it in this product. Seed it in DigiTrust and start a journey that is rewarding, a journey that is simple, a journey that you can do right with your phone right there, and the freedom is all yours.
Wow. A round of applause.